When was the last time you heard anyone talk about KTM with the energy the brand used to create? Almost never. And that says everything. There was a time when this Austrian powerhouse dominated motorcycle racing. MotoGP victories, Dakar Rally Championships, and the orange machines were everywhere that mattered. For decades, KTM felt like a guarantee. If you wanted performance, you bought orange. The momentum was real, and the brand rode it all the way to becoming Europe's largest motorcycle manufacturer. But momentum only lasts if the world around you does not change too quickly. Financial mismanagement accelerated, debt accumulated faster than revenue, and the racing identity that once made KTM so desirable slowly turned into an expensive liability. The name stayed familiar, but the financial foundation crumbled. So today's question is simple. How did KTM rise this fast? And what pushed it into a €2.9 billion bankruptcy disaster? KTM's story begins in 1934 when Hans Trunkenpolz established a small metal workshop in Mattighofen, Austria. What started as a modest repair shop eventually evolved into Kronreif and Trunkenpolz Mattighofen, the company we know today as KTM. Trunkenpolz harbored an ambitious vision to challenge the seemingly unbeatable Japanese motorcycle dominance that swept across global markets throughout the 1970s and the 1980s. This small Austrian workshop possessed something the Japanese giants could not replicate: a European racing heritage and an almost fanatical dedication to off-road performance. While Honda and Yamaha were building motorcycles for the masses, KTM focused intensely on creating enduro and motocross machines that could withstand the most punishing conditions imaginable. They were not looking to win the sales volume race. They were simply looking to win races. Perhaps KTM's most brilliant early decision was making orange their signature color. In the sea of red, blue, and green Japanese machines, the bright orange KTM stood out like beacons. It was not just a paint choice, it was a declaration of identity. Orange became synonymous with European racing excellence, a visual shorthand that told everyone these were not merely motorcycles, but purpose-built racing machines. Racing was not just a marketing strategy for KTM. It was the company's entire reason for existence. From its earliest days, KTM poured resources into competitive racing circuits, from local European enduro competitions to international motocross events. Their philosophy was encapsulated in 3 simple words that would eventually become their official slogan: ready to race. For KTM, this was not clever marketing. It was quite literally their corporate identity and driving purpose. The company cultivated deep relationships with professional riders, creating a feedback loop that constantly improved their machines. Engineers created prototypes, racers pushed them to their limits, and the data flowed back to Mattighofen for the next iteration. This process created a virtuous cycle of improvement that prioritized performance over profit margins, a mindset that would later prove both KTM's greatest strength and its fatal flaw. What truly set KTM apart was their approach to engineering. The Mattighofen facility became legendary for its precision manufacturing capabilities, combining the meticulous standards of German engineering with the passionate innovation of Italian design. KTM pioneered lightweight frame technology that revolutionized dirt bikes, creating machines that maintained structural integrity while shaving critical weight. Their single-cylinder engine innovations delivered power-to-weight ratios that competitors struggled to match. By the early 2000s, KTM had established itself as a premium European alternative to Japanese motorcycles, with quality standards that justified higher price points. Customers were not just buying a motorcycle, they were buying into a racing legacy, European craftsmanship, and the promise of uncompromised performance. The brand had successfully carved out its niche in the global motorcycle market. Yet even as KTM experienced its greatest successes, the foundations for its eventual collapse were already being laid. The very racing DNA that had built the company was beginning to consume it from within. The first significant pressure point came from intensified Japanese competition. Honda, Yamaha, and Kawasaki had taken notice of KTM's growing success and began responding with their own performance-oriented machines. The Japanese manufacturers held a crucial advantage, economies of scale that KTM simply could not match. While KTM was producing thousands of motorcycles, the Japanese were producing hundreds of thousands, allowing them to spread development costs across a much larger production base. This led to aggressive price wars in the mid-range motorcycle segment, where most of the volume exists. KTM's premium pricing strategy, necessary to support their racing programs and European manufacturing costs, came under increasing pressure. Consumers began questioning whether the orange bikes were truly worth the premium when Japanese alternatives offered comparable performance at lower price points. Meanwhile, racing costs were escalating at an alarming rate. KTM's entry into MotoGP, the pinnacle of motorcycle racing, required massive annual investments that stretched into 9 figures. The company's participation in the Dakar Rally, while yielding an impressive string of victories, was consuming over 50 million euros annually in development, logistics, support vehicles, and rider contracts. Factory rider contracts became increasingly expensive as KTM competed for top talent against well-funded Japanese teams and Ducati. The technology development required for racing success, including specialized engines, cutting-edge electronics, and proprietary suspension systems, consumed enormous resources with limited commercial applications. The harsh reality was that much of what made a motorcycle successful on the track did not translate directly to profitable consumer products. By 2015, warning signs of market saturation were becoming apparent. European motorcycle sales began to plateau after years of steady growth. The broader transportation landscape was shifting dramatically toward electric vehicles, threatening the traditional motorcycle market that KTM dominated. Younger demographics showed less interest in motorcycle ownership than previous generations, preferring urban mobility solutions and ride-sharing services. Economic uncertainty following global financial crises made luxury recreational vehicles, like high-performance motorcycles, increasingly difficult to sell. The market was contracting precisely when KTM needed it to expand to support their ambitious racing programs. Internally, KTM's financial strain was becoming more difficult to disguise. Research and development spending was consuming 8 to 12% of annual revenue, significantly higher than industry averages. Manufacturing costs were rising faster than retail prices could be increased in a competitive market. The company's dealer network expansion, critical for competing globally against Japanese brands, required significant capital investment that further strained resources. Yet despite these warning signs, KTM made what would prove to be a fatal decision, doubling down on racing at all costs. In 2017, KTM expanded its MotoGP factory team operations, committing to a program that would eventually exceed 100 million euros annually. They hired top-tier riders like Brad Binder and Jack Miller, paying premium salaries to secure competitive talent. The technology development costs for prototype engines and chassis created a constant drain on financial resources that required ever-increasing borrowing to sustain. Their Dakar Rally program, while spectacularly successful with 18 consecutive victories, created enormous expectation pressure that made withdrawal impossible. Each year, the factory team expanded to maintain their competitive edge, with support vehicle and logistics costs multiplying. Despite the prestige of their Dakar dominance, the harsh financial reality was that prize money and sponsorship covered only a fraction of the actual expenses. This disconnect between racing passion and commercial logic became increasingly apparent in board-level decisions. Leadership prioritized racing prestige over financial sustainability, and key decisions were influenced by racing success metrics rather than business fundamentals. The marketing budget became heavily weighted toward motorsports, while consumer motorcycle development took a secondary priority. The result was a company structure that looked impressive from the outside, but was hollowing out from within. KTM's racing success created a perception of business health that masked the reality of growing financial instability. The company was winning races, but losing the financial battle. By 2023, KTM's debt had accumulated to 2.9 billion euros. The company had borrowed extensively to fund racing operations and global expansion, securing credit facilities against future revenue projections that were becoming increasingly unrealistic. Interest payments alone were consuming an alarming percentage of cash flow, creating a debt spiral that would eventually prove inescapable. The House of Cards finally collapsed in November 2024, when KTM filed for bankruptcy protection under Austrian law. The self-administration filing in Austrian courts officially disclosed 2.9 billion euros of debt that had been accumulating for years. Racing operations were immediately suspended, and factory production halted pending creditor negotiations. The creditor meetings that followed were chaotic, Emergency sessions with major lenders revealed the extent of the financial mismanagement. Supplier payments were suspended, leaving parts manufacturers and service providers unpaid. Employee layoffs affected over 3,000 workers, devastating the Matacofin region, where KTM had been a primary employer for decades. The dealer network was left without inventory or support, stranding loyal customers and business partners. The shockwaves through the motorcycle industry were immediate and severe. Analysts who had long celebrated the racing success of KTM now expressed disbelief at the financial reality hidden beneath the victories. Competitor brands began scrambling to acquire KTM assets, particularly their valuable intellectual property and manufacturing equipment. Racing Series faced the sudden loss of a major manufacturer's participation, threatening sponsorship revenues and viewer interest. The Austrian government, recognizing the national significance of KTM as both an employer and a cultural touchstone, began considering intervention options. However, the scale of the financial collapse made rescue efforts challenging, with potential bailout costs exceeding what taxpayers could reasonably bear. Media and public response reflected the emotional connection many had formed with the brand. Motorcycle enthusiast communities expressed devastation, sharing stories of their orange machines and the meaning KTM had in their lives. Racing fans questioned the future of the distinctive orange motorcycles that had become fixtures on starting grids worldwide. Financial press began analyzing how racing success had masked business failure, questioning whether other manufacturers might be following similar unsustainable paths. The details of KTM's financial devastation were stunning. The 2.9 billion euros debt broke down across multiple categories, including bank loans, supplier credit, unfulfilled dealer obligations, and racing team contracts. Shareholder value was completely eliminated, with stock becoming effectively worthless. Asset valuation dropped 80% within weeks, as liquidation scenarios replaced going concern valuations. Perhaps most concerning were the pension fund obligations that threatened employee retirement security. KTM's racing legacy, built over decades, was interrupted overnight. The MotoGP team withdrawal mid-season left riders, technicians, and support staff suddenly unemployed. Dakar rally participation, which had defined the brand for many enthusiasts, became uncertain for 2025. Factory rider contracts were terminated with little warning, sending top talent scrambling to find positions with other teams. Racing technology development was suspended, ending innovation pipelines that had been years in the making. The collapse of KTM's market position was equally dramatic. European market share dropped from 15% to just 3% in the months following the bankruptcy announcement. The dealer network reduced from 3,000 global locations to fewer than 800, as franchisees abandoned the struggling brand. Production capacity utilization fell below 20% as the company struggled to maintain even minimal operations. Brand value assessments showed a 70% decline, erasing decades of careful image building. Leadership exodus accelerated the downward spiral. CEO Stefan Pierer, who had led the company through its period of greatest expansion, stepped down amid criticism of his financial management. The board of directors faced legal challenges from shareholders and creditors, alleging negligence and misrepresentation. Key engineering talent, the lifeblood of a company built on technical innovation, began leaving for competitor brands, taking institutional knowledge with them. Looking back, 3 critical mistakes stand out as causing KTM's dramatic fall. First, racing costs exceeded business reality. The annual racing expenditure of over 150 million euros was fundamentally unsustainable for a company of KTM's size. The technology development for racing generated prestige and marketing value, but limited commercial returns. Prize money and sponsorship covered only about 30% of actual costs, creating a constant drain on resources. Perhaps most damaging was how racing success created false confidence in financial management. Victories on track masked defeat on the balance sheet. Second, KTM ignored the market shift toward electric mobility. While competitors like Zero and Energica were gaining market share with innovative electric motorcycles, KTM maintained minimal investment in electric technology. Consumer preferences were clearly shifting toward sustainable transportation options, particularly in urban environments where electric motorcycles excel. Regulatory changes in European markets were increasingly favoring electric vehicles, and some cities announced future bans on internal combustion engines. KTM remained committed to traditional combustion technology precisely when the market was pivoting. Third, KTM pursued debt-fueled growth without a profit foundation. They borrowed extensively to fund expansion, rather than growing organically through reinvested profits. Revenue growth, while impressive in percentage terms, never matched the rate of debt accumulation. Interest payments eventually consumed 15% of annual revenue, creating a financial burden that became unsustainable. Perhaps most critically, there was no contingency planning for economic downturns or market shifts, and the company operated as if the growth trajectory would continue indefinitely. The KTM collapse offers a profound lesson about what we might call the racing paradox. Racing success does not guarantee business success. In fact, it can mask fundamental business problems behind a veneer of trophies and championships. Brand prestige must be balanced with financial discipline, particularly when competing in expensive motorsports categories. Racing can be a powerful marketing tool, but it requires a sustainable business model to support it. Passion projects, no matter how successful in their domain, need profit margins to survive. The implications for the wider motorcycle industry have been significant. Other manufacturers are reassessing their racing investments, conducting cost-benefit analyses of expensive factory racing programs. European manufacturing as a whole faces increased scrutiny, with questions about whether premium pricing can support local production costs. Racing series are considering cost control measures to prevent other manufacturers from following KTM's path. Investors are demanding clearer separation between racing and commercial operations, with transparent accounting for motorsports expenditures. Perhaps most tragic is the potential loss of KTM's Austrian engineering legacy. 30 years of innovation in motorcycle design, engine development, and chassis dynamics may be scattered as the company shrinks or disappears entirely. The skilled workforce that made KTM exceptional is dispersing to competitor companies, taking their expertise with them. Manufacturing excellence is leaving Austria, potentially never to return. The cultural impact on Austrian industrial identity, which took pride in KTM's global success, has been devastating. 6 months after the bankruptcy filing, KTM is still fighting for survival. Various restructuring plans have been proposed, but the debt burden remains overwhelming. Parts of the business may survive in reduced form, perhaps under new ownership, but the KTM that dominated racing for decades is effectively gone. Maybe that's the real lesson of KTM's rise and fall. You can win every race, dominate every championship, and build the most advanced motorcycles in the world. But at the end of the day, someone still has to pay the bills. Victory laps don't pay creditors. Trophies don't satisfy shareholders. And racing heritage, no matter how glorious, can't overcome financial reality. The orange machines that once symbolized the pinnacle of racing technology now stand as cautionary monuments to misplaced priorities and financial overreach. The passion that built KTM ultimately consumed it. The racing DNA that made the brand special became the very thing that rendered it unsustainable. In motorsports, there's a saying, to finish first you must finish. KTM won countless races, but in the race that mattered most, the one for business survival, they failed to reach the checkered flag. The once mighty Austrian empire of motorcycling has fallen, leaving us with questions about what success really means and how easily passion can override prudence. When passion becomes the only driver, even the most successful racing brand can crash. KTM's 2.9 billion euros implosion proves winning races doesn't mean winning at business. Racing made them legendary, but debt made them history. If you agree, this reveals the dangers of prioritizing prestige over profit. Comment below. Subscribe for more corporate rise and fall stories you won't hear anywhere else.